Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at the stocks on the move today. I'm Paul Sweeney alongside Isabel Lee, and we're joined by our old friend, the Alexander Semenova at Bloomberg News. Alexander, what are you looking at?
Always great to be on with you guys. So the meme stock revival is stretching into a second day today. Amateur traders are once again piling into beaten down companies, heavily shorted companies like it's 2021 all over again in an effort to get rich quick. And some of the names that are moving today are GoPro, Krispy Kreme, Beyond Meat. Just take a look at the swing in GoPro right now, up 45%. It was up as much as 73% earlier into the trading session. And again, this has to do with the euphoria that is spreading across broader markets. More broadly, stocks are trading at record highs. Bitcoin has doubled in the past year. You're seeing SPACs all the rage again. And so it's not surprising that traders are this animal spirit is permeating into more speculative corners of the market. They're looking at where to put their money beyond companies like tech that have run up so much. They're scouring Wall Street bets forums on Reddit and finding these companies. Actually, interestingly, JP Morgan's trading desk today flagged that their internal basket of meme stocks is up 7.9% month to date versus the S&P 500's 1.7% advance. So really a testament of the euphoria that is happening across markets. If you look at Kohl's yesterday, the beaten down retailer that kind of led this revival, about 48% of Kohl's float is sold short. That's according to data from S3 Partners, meaning that it is being used to bet against the stock price. By comparison, it's 20% for GameStop. So a lot of these meme traders are finding heavily shorted companies, and a short squeeze is kind of the culprit of some of these names.
What about Morgan Stanley? What's happening over there?
Yeah, a little bit more serious than meme stocks. It is being probed by the Financial Industry Regulatory Authority over its vetting of clients for risk of money laundering. This is according to a report from the Wall Street Journal. It focuses on practices that happened from October 2021 through September 2024. Morgan Stanley is already facing potential fines from federal investigations into its anti-money laundering practices, specifically in its wealth management unit, meaning it's not doing enough to kind of vet clients who could potentially be doing wrongdoing. The stock right now is actually a little changed, not moving much on this report.
All right, so I'm the only one in this room that did internal audit for a brokerage firm.
What was
and
that
I can
like?
tell you, when we go out to a branch in the middle of nowhere, we'd be there for a week. I would say at least half of our time, this is way back in the 80s, was money laundering stuff.
Wow.
Really?
Yeah. And I'm sure it's even way more today. So I'd be surprised because, these brokerage firms take that stuff so seriously and they have so many controls on, it's if there was anything there, not at any firm, it has to be fraud because their controls are so tight. So it's interesting to see how that plays out.
And the response today from Morgan Stanley was that it's made so much investment into anti-money laundering practices, but apparently that's not enough.
All right, Texas Instruments.
So that company is tumbling today after stoking fears that the tariff-fueled surge in demand is likely to be short-lived. This is the key chip maker, of course, for producers of cars and factory equipment. The company did issue a third quarter forecast that beat most estimates, but the outlook was a little bit more guarded than some investors had hoped for. Really interesting is the stock was falling as the earnings call was happening because analysts didn't like the tone coming from management that was a little bit more negative than they were hoping for. The main concern is whether tariffs and trade disputes will hurt sales, a sales resurgence that is in its early stages. A lot of people think that people, front-loaded their purchases of chips out of fear that, prices will be higher from tariffs, and that might not continue.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.